Welcome to UXL, where you can learn new skills anytime and anywhere. Visit uxl.com to explore our full course selection. This lesson is part of a larger course. Check the video description below for a link to the full course where you can enroll. If you enjoy our content, please like and subscribe. For your convenience, the course cover displayed on your screen provides the complete course title and lesson title. Let's proceed with the lesson. Lesson: Analyzing Fixed and Variable Costs. Analyzing fixed and variable costs is a fundamental aspect of strategic cost management, providing essential insights necessary for effective decision-making. Understanding the behavior of costs in relation to changes in business activity levels allows managers to predict and control expenditures, optimize resource allocation, and enhance overall profitability. Fixed costs, by definition, are expenses that remain constant regardless of the level of production or business activity. Examples include rent, salaries of permanent staff, and depreciation of assets. These costs do not fluctuate with the volume of goods or services produced, offering predictability, which is crucial for long-term financial planning. However, the inflexibility of fixed costs can pose risks during periods of low production, as these expenses must still be covered regardless of revenue levels. Variable costs, in contrast, change directly in proportion to the level of production or business activity. Common examples are raw materials, direct labor, and utility costs related to production. These costs provide flexibility as they increase with rising production and decrease when production levels drop, aligning expenses more closely with revenue streams. This adaptability can be advantageous in managing short-term financial pressures and responding to fluctuations in demand. The distinction between fixed and variable costs is not always clear-cut. Some costs, known as semi-variable or mixed costs, exhibit characteristics of both. For example, a utility bill may have a fixed base charge plus a variable component based on usage. Understanding these nuances is essential for precise cost analysis and management. Accurately distinguishing and analyzing fixed and variable costs enables businesses to perform break-even analysis, which determines the sales volume at which total revenues equal total costs, resulting in neither profit nor loss. The break-even point is a critical metric for assessing financial viability and planning future growth. It is calculated using the formula BP equals fixed costs FLAIR. This calculation highlights the importance of both cost categories in determining the minimum sales needed to avoid losses. For instance, consider a company that manufactures widgets. If the fixed costs associated with production are $50,000, the selling price per widget is $10, and the variable cost per widget is $6, the break-even point would be 12,500 units. This means the company must sell 12,500 widgets to cover all its costs. Any sales beyond this point contribute to profit, while sales below this threshold result in a loss. The analysis of fixed and variable costs also plays a pivotal role in pricing strategies. By understanding the cost structure, businesses can set prices that not only cover costs, but also achieve desired profit margins. Cost-plus pricing, for example, involves adding a markup to the cost of producing a product to ensure profitability. This approach requires a thorough understanding of both fixed and variable costs to determine an appropriate selling price. Moreover, cost behavior analysis aids in budgeting and forecasting. By projecting how costs will change with different levels of activity, businesses can create more accurate budgets and financial forecasts. This predictive capability is invaluable for strategic planning and resource allocation, allowing companies to anticipate and mitigate potential financial challenges. The relevance of fixed and variable costs extends to performance evaluation and decision-making. Cost-volume profit analysis, which examines the relationship between cost structures, sales volume, and profitability, relies heavily on the understanding of fixed and variable costs. CVP analysis helps managers make informed decisions about product lines, pricing, and production levels. For instance, if a company is considering introducing a new product, CVP analysis can help determine the feasibility and potential profitability by analyzing how the new product will impact overall costs and revenues. Additionally, The analysis of fixed and variable costs is crucial in cost control and reduction efforts. Identifying areas where variable costs can be reduced, such as negotiating better prices for raw materials or improving production efficiency, can lead to significant savings. Similarly, managing fixed costs, such as renegotiating lease terms or optimizing the use of fixed assets, can enhance financial stability and profitability. In times of economic uncertainty or downturns, understanding the behavior of fixed and variable costs becomes even more critical. Companies facing declining sales must quickly adapt to changing conditions by managing costs effectively. Variable costs can often be scaled back more easily in response to reduced demand, while fixed costs require more strategic measures to manage. For instance, a company might reduce production hours or implement temporary layoffs to lower variable costs, while exploring options like subleasing unused office space to mitigate fixed costs. Real-world examples underscore the importance of fixed and variable cost analysis. During the COVID-19 pandemic, many businesses experienced drastic changes in demand, highlighting the need for agile cost management. Restaurants, for example, faced fixed costs such as rent and utilities, even as customer foot traffic plummeted. To adapt, many shifted to delivery and takeout services, which altered their variable cost structures but allowed them to maintain some level of revenue. Such examples illustrate how a deep understanding of cost behavior can support businesses in navigating challenges and seizing opportunities. The integration of technology in cost management has further advanced the analysis of fixed and variable costs. Tools such as enterprise resource planning systems and cost accounting software enable businesses to track and analyze costs with greater precision and efficiency. These technologies provide real-time data and insights, allowing for more dynamic and informed decision-making. For instance, sophisticated software can model different cost scenarios and predict the financial impact of various business decisions, enhancing strategic planning capabilities. Furthermore, the principles of fixed and variable cost analysis are applicable across industries and organizational sizes. Whether a small startup or a large multinational corporation, understanding cost behavior is fundamental to financial management. For startups, in particular, managing cash flow and ensuring sustainability often hinge on effectively analyzing and controlling costs. In contrast, large corporations may use cost behavior analysis to optimize global operations and improve competitive positioning. In conclusion, the analysis of fixed and variable costs is a cornerstone of strategic cost management. It provides critical insights for break-even analysis, pricing strategies, budgeting, forecasting, performance evaluation, decision-making, and cost control. By understanding how costs behave in relation to business activity levels, managers can make more informed and effective decisions, ultimately enhancing profitability and financial stability. The integration of technology further amplifies these capabilities, offering real-time data and advanced analytical tools to support dynamic and strategic cost management. As businesses navigate an ever-changing economic landscape, the principles of fixed and variable cost analysis remain indispensable for achieving sustainable success. This concludes the lesson. We trust you found this video informative and engaging. To enroll in the complete course, please use the link provided in the description below. At UExcel, we are committed to your learning journey. Each course offers a certificate of completion, online support, and downloadable resource files to enhance your experience. If you found our content valuable, we invite you to like this video and subscribe to our channel. Thank you for joining us, and we look forward to supporting your continued pursuit of knowledge.